So, welcome everyone. I'm Alexander Mihalcha, and today we're joining by Lawrence Gilioli, founder and CFO of Lenderwize. Thank you for being here.
Thanks very much for the opportunity.
Before we dive in, could you give us a quick overview of what Lenderwize does?
Sure. Lenderwize is a fintech and paytech platform. We are filling in the void between these two worlds of fintech and paytech. We actually have processed over $1 billion in euros on our platform in the last 2 years. So we have a very solid and robust platform, and we're serving banks and non bank lenders.
That's fascinating. And what inspired you to create Lender? Was there a specific moment or experience that sparked this journey?
I'm sorry, say that again. I didn't hear that.
So, what inspired you to create Lenderwise? Was there a specific moment or experience that sparked this journey?
Thanks for the question. Yes, no, we were inspired by the opportunity because we uncovered a big need in the telecom space where there is a big payment mismatch in the supply chain. So we were inspired by this payment mismatch whereby the tier ones pay typically on 60 days to suppliers that need to pay sub suppliers typically on 7 days. So a 53-day cash flow gap in an industry with $64 billion sparked our curiosity, and we found a solution helping out telecom operators on a global basis.
I see. And what was your background before starting this venture?
So, I'm actually a dual citizen, US and Italian. I've been a country manager for several multinationals in Italy. I have a master's in telecommunications, so I come from the telecom industry, and I've always had a creative mind with a technical training.
Okay. And let's go back to when you first started. What major challenges or gaps did you see in the market that made you think this needs to be solved?
Very good question. So we started as a traditional fintech platform. There are other fintech platforms out there. There's some great platforms out there that are either invoice marketplaces or factoring platforms or asset-backed lending platforms. There's several loan servicing platforms out there which work very, very well. And we actually have developed a very similar technology to what's already available. Sparked our curiosity more than curiosity. What really the problem we identified is the inability for the fintech world to communicate with the paytech world. Most people think that fintech and paytech are actually interchangeable, but they are not. They serve distinct functions. Fintech is more on financial services such as lending, risk management, and credit underwriting, while paytech is centered on payment processing, cash flow automation, transaction security. So there's two very distinct worlds. And the challenge is that these two indices, they operate in silos. They are in two
Right.
different worlds, so that financial transactions are less efficient. So Lenderwise is bridging this gap by seamlessly integrating lending and payments, and therefore creating a risk mitigating and real time financial ecosystem.
Okay, and because you mentioned this, from your perspective, what are the biggest differences between fintech and paytech that most people misunderstand?
Fintech has to do with a software which basically manages assets and notifications, maybe wallets. It allows for someone to purchase an asset, which could be an invoice, for example. It allows to monitor the payments for that, but it doesn't actually transact. So the paytech side of things actually moves the funds. One thing is purchasing an asset on the fintech side. One thing is actually transferring the value, the payment for that, via a bank transfer. And one thing is capturing the incoming payment. So the fintech world is made up of loan servicing software, essentially, while the paycheck world is made up of actually of virtual IBANs, of virtual accounts, of cash dominion, of cash control, and therefore those tools which are necessary to actually make sure that when an asset is purchased, it's actually paid for.
Right. And what capabilities do you see lacking most in the current fintech landscape?
So the capabilities are actually live. We don't see great competition, but we have actually developed a service which works, and therefore the opportunity today is to move towards embedded finance and embedded payments in an integrated and seamless way. The opportunity is to do it now because competitors are sooner or later will be doing this. So we actually invite anyone that's either an originator that's originating
Yes.
receivables or selling or bringing on board clients. We're inviting lenders and banks to actually adopt a safer tool like what we have. Actually, since we're in the telecom space, Even big tier one operators are now reaching out to us asking if they can use our platform with a white label solution because they like the ability to pay their suppliers sooner. That gives them greater quality, greater continuity, which of course is essential to a telecom operator. So the opportunity today is live, it's big, it's safe, it's scalable, and something that is changing the world, and the world will have to adapt to these technologies. Aside from Lenderwise, aside
Yeah,
from us, the world has to move in the direction of better, faster, safer, and cheaper
right.
embedded solutions.
Right, that's fascinating. And could you elaborate on why the existing solutions weren't meeting these needs?
So the solution will lead to banks and non-bank lenders using services of this kind because in today's world everything moves more quickly, everything is quick, and if you are not quick to adapt and to evolve, you can lose a train. So we see banks moving in this direction, we see non-bank lenders moving in this direction because they want to mitigate risk. And ultimately, the technology that I'm talking about is not just in making things faster, it's making it safer. So there's a whole bunch of risk mitigating features integrated into this. And of course, anyone that deploys funds wants to be sure that they get their money back. They want to make sure that they get paid for it. And they want to be sure that they have continuity of service and satisfied clients. And that's what we're offering thanks to our platform.
Yeah. And what is the breaking point that made you decide to tackle this problem?
So that's a very good question. We ended up having the need for our own services. So the breaking point was we identified the problem on our own back. The problem
Hmm.
being that one thing is purchasing an asset and an invoice, and one thing is actually transferring it. Anyone else that doesn't have this technology, and that's 95% of banks and non bank lenders, anyone that doesn't have this technology has to have an internal treasury, people that will purchase an asset and then go online banking and actually put in the data relative to the actual transaction. That means putting in the invoice number, the amount, the currency, the amount, and any other data which allows it to be identified aftermath. So this manual intervention means human beings have to act. Human beings are great. We all love human beings, but human beings can make mistakes. Human beings can be slow. Human beings can apply discretionary limits when it comes to purchasing
Right.
and transferring, maybe because they want to do a favor to an important client or to an important lender. So, all these human elements, which can be appreciated from a romantic point of view, but cannot be appreciated from a technical and from a risk mitigation point of view, because it creates a time gap between the asset purchase and the transfer, the cash movement. That time gap means there's two different databases, and if these two databases are not synchronized in real time, that means that another player cannot actually perform real time reconciliation or real time auditability of all the transactions. So that introduces an element of risk and of error, of human error, which, thanks to our systems, we avoid. And that's the direction that all banks have to go into, avoiding errors.
Yeah, I got it. I got it. And so, walk us through how Lenderwise addresses these challenges. What makes your approach unique?
So, what's very unique about us is that we've been able to crack the code in between these two worlds. The fintech world and the paytech world are two different silos. They don't talk to each other. They don't talk to each other because there isn't a protocol, there isn't a software, middleware, there isn't a method for exchanging on a standard basis information. So that means that Paytech providers, and there's some very good providers out there, but they have limited APIs. And the majority of fintech platforms barely have working APIs. And I say this having had confessions from major global banks stating that they don't have working APIs. The API doesn't pass all the information that's needed. Maybe it'll say the balance, maybe it'll say the amount, but it won't give the full string of information which allows to properly trace and automate the purchase and the incoming payment. And therefore, our uniqueness is that we've cracked the code, we've identified the right platforms, which can indeed allow us to create that middleware, to create that interface, and to provide automated purchases and automated incoming payments so that we actually can make sure that everything is done in a seamless and safe way.
That's very interesting thing. And where do you see the biggest opportunities for innovation in financial technology integration?
So what I'm describing is actually a great opportunity because the first to be able to provide this kind of fully embedded paytech and fintech service means that we can go, as we are, go to a bank and offer them a better way to deploy their funds, a safer way for them to deploy their funds, a faster way to deploy their funds with higher margins. Because as you automate, obviously, automation is also cheaper with respect to human beings. It's faster, it's safer because you can implement smart contracts to make sure that mistakes aren't made, and you can automate systems to validate and check things before they're actually executed in real time. So the opportunity here is to exploit today's technologies, which include, of course, artificial intelligence, obviously means that today you can also implement AI in mitigating risk, in detecting fraud, in detecting any kind of strange or incorrect business or any mistakes. You can use AI to deep dive into a greater underwriting, to greater under analysis, credit analysis, a greater ability to validate the single transactions and the sellers and the debtors of the invoices in the first place. So the opportunity is huge. We are talking about a multi trillion dollar opportunity here. Once again, filling in that void between fintech and paytech with a faster solution.
Okay, okay, I see. And if you had unlimited resources, what would be the first integration problem you'd solve and why?
So, the most basic problem we solved was the ability to capture an entire API with all the data that's necessary to match that to the purchase of an asset, so that you can fully reconcile these two pieces of information in real time. That might sound easy, but it's not. It's not easy because banks don't have working APIs. They don't pass all the information. And a lot of the EMIs out there, which are good, a lot of the paycheck providers are good, but they don't have all the information that's necessary. Unfortunately, we are in a world where a lot of paytech providers promise more than they can currently deliver on a global scale.
Okay,
It's not all their fits, has to do with global compliance issues and different regulations in different jurisdictions. So I don't mean to say anything negative about paytech providers, but for sure, because there isn't a single global paytech provider out there that can do multi-currency, cross-border, large values, B2B, because of that, the solution that we have adopted is multiple EMIs and
all
multiple
right.
payment processors. So according to the jurisdiction or the currency, we can provide a complete service to our clients.
Okay. And I have a little curiosity then. When you talk to potential clients, what's the biggest misconception they typically have about what you do?
Well, the biggest misconception is probably very basic. It probably has to do with change. And sometimes it's not easy for people to change because sometimes it scares people.
Yeah,
AI in itself scares people. When you're talking about something that's so big and so important, sure, someone, if they're open minded, can realize the importance and the grandeur and the opportunity
right.
there. But at the same time, some people are afraid for their jobs. Some people are afraid for under showing human mistakes. And therefore, the biggest obstacles that we have found are really more psychological, having to do with banks, insurances. Big telecom operators are slow to change because, of course, any change, even in their billing software, would mean modifying billions and billions. And obviously,
Right.
it's hard to change. Sometimes there are legacy systems. Well, in all these cases, there are legacy systems which are very hard to change. So it's not simply their fault. It's simply the fact that today's world is changing so quickly that you lose a train if you don't look and try and test. And that's the beauty of all of this, is that it can be easily tested without changing whatever is existing, and therefore making it a very safe and sound decision to adopt novelty.
Okay, okay. And could you share a specific success story of a client who saw significant results using your solution?
Yes, we have multiple clients. As I mentioned, we've processed over 1 billion on our platform in the past 2.5 years. So we have a bunch of lenders and a bunch of clients. We have success stories on all fronts. We have lenders that have earned above market interest rates on a recurring basis with a high RRR, and they have been extremely happy and recurring. In fact, we have barely lost any lenders over our last 3 years. Likewise, our clients, which are telecom operators, have great benefits. They actually, thanks to the fact that we are solving their liquidity needs, they are able to increase their margins and they're able to increase their revenues up to 30 times on a monthly basis. By giving them more cash, they negotiate better terms with the suppliers and therefore they have higher margins. So our clients all love us. We have 95% recurring clients, we would have 100% if we didn't cherry pick uh, amongst those that maybe are a bit slower at repayments.
Yeah, yeah.
Clients love us and grow. Lenders love us and grow. And the bottom line is it's a win-win situation for the whole ecosystem.
Right, that's really awesome to sound this. And looking at the broader industry, what key trends are you seeing emerge?
So the trends in the whole financial world are to move towards better, faster, cheaper, and safer solutions which are scalable and which can make sure that a big bank is safeguarded from a compliance point of view, safeguarded from the point of view of deploying funds and making sure that the funds are made available, and being sure that they can provide transparency to their own funders. Transparency is essential, and that's what we are offering ultimately, because by virtue of this integration between fintech and paytech and the cash movements, which are synchronized in real time, that means we are giving transparency in real time. We're giving real time reconciliation, real time auditability. And that is, of course, very powerful for any banks or lenders. So, in the bigger picture, we see the need for this, not just in the telecom space, which we are very strong with, but in the whole digital economy, in the whole economy where there are digital goods, where there's e-commerce, where there are digital traces, where these digital traces need to be captured and validated, which is also what we are doing indirectly, so that we can prove that services have already been rendered and that the underlying assets have been actually been validated. So this means that the future is for platforms that can handle digital traces, can handle digital transactions, can prove that services have been rendered, and therefore can intervene also if there were any monkey business or if there were
Yeah.
anything done improperly. So, this digital world that we are funding and the digital economy that we are funding is actually something that we find it safer than the tangible world. Because the tangible world, I've seen funders fund the shipment of containers from China to Brazil, spending tens of millions on a monthly basis. But they might know where the good is, but they don't know in real time what's inside every
Yeah.
single container inside the ship. They don't know the quality of those goods. They don't know if it's delivered or stuck in customs or paid for all in real time. In our case, we have a container, a digital container, and we can say yes to all of this, meaning that if there's anything wrong or perishable or incorrect, we don't fund. So we stop not after a month that the physical goods have been delivered. We stop immediately in real time, and that is a big mitigating factor.
Yeah, nice comparison here. And how do you think these trends are affecting how businesses operate in your space?
So I'm sure this will affect everyone. I'm sure everyone will be going in this direction because it's, once again, it's better, faster, cheaper, safer, and more scalable. And no one can be against this. No bank, no non-bank lender, no, not even any telecom operator can be against novelties which are proven assets and proven services. No one can be against something like this other than the initial hesitation because novelty tends to scare, as I was mentioning,
Yeah.
and fear that maybe it has to impact the existing legacy systems. In reality, the solution that we've adopted does not impact in any way existing platforms or existing legacy systems. It's an add on which seamlessly integrates via an API.
Okay. And I have a good one. What do you think most business owners are getting wrong when trying to address this specific problem?
That's a very good question. So I don't want to say others make mistakes because that sounds bad. I want to say that one has to experiment, one has to try. If you don't try, that's a mistake. But a lot of great, fantastic entrepreneurs better than me certainly try and certainly like to adapt to new technologies. Obviously, when someone works with other partners, sometimes it's better to exploit third party platforms,
Right.
third party know how, third party investments, because no one can invent everything. The concept that we strongly believe in is partnerships and working with additional partners and players, those which might have a specific expertise and which can be fit within a mosaic and offer a portion of the service offering. So I think the best recommendation to any entrepreneur is don't try to reinvent hot water. Exploit partnerships, exploit other companies that can do a piece of the cake. Of course, that doesn't mean that you have to give away your know how, your IP, or your clients. That, of course, is always essential to any business that has to own its own clients. But it's absolutely feasible and important to exploit novelty. And novelty comes out of multiple and new players that come about every month, basically.
Okay. Now let's be more specific on this topic. And what advice would you give to business owners who want to stay ahead of these changes?
So basically, I would suggest to start integrating technologies into your financial processes immediately. It's essential because
Okay.
finance, liquidity of any company is value, is great value. So I would tell an entrepreneur, don't wait until the inefficiencies force you to have to adapt. I suggest focusing on automation. I suggest to streamline manual workflows and to invest in AI driven decision making because it's smart, it works. And also to build, as I was mentioning, strategic partnerships rather than trying to develop everything in house. So, because the bottom line is that the future belongs to companies that embrace frictionless financial integration, is the way I see it.
Okay, really good advice though. As we wrap up, what's next for Lenderwise? Any exciting developments on the horizon?
Yes, we have some very exciting developments because we are very technologically oriented and fast adapters. And so we are, from a financial point of view, we are onboarding multiple funders and multiple banks, meaning that we don't do just trade finance or invoice finance. We also do supply chain financing, reverse financing. We're also developing dynamic discounting, meaning that our clients telecom operators will have the ability not only to receive funding if they need it in that month, but if they have excess cash sitting on their bank account, to actually deploy it in a reverse format so that they can actually decide on a monthly basis with a very simple dashboard. Simply click, I need cash, I'll sell these invoices. I have cash, I will deploy this funding for a
Mhm.
return so that it becomes a money making machine based on the actual needs of the clients. That's what we're doing from the point of view of clients. From the point of view of funders, we are giving them greater and greater transparency, greater and greater access to these various asset classes, not just the telecom space, voice and SMS, but energy, electricity, e-goods, e-commerce, direct carrier billing. In other words, all those other sectors which are always digital because the proof of service is digital. And therefore, we are actually not only funding the telecom industry, but today we are going to the market and saying that we fund the digital economy as a whole.
Okay, nice one. And this comes from my mind now. What emerging trends do you believe will have the biggest impact on your business in the next, let's say, 12 or 24 months?
Artificial intelligence will have. I'm sorry, the question was what's the biggest impact? I didn't hear that. If you could
Impact.
repeat it.
Yeah. Impact on your business.
Artificial intelligence, without a doubt. Artificial intelligence is impacting the internal processes of a company. It's impacting the way our product development. It's impacting the way we report to our clients and to our lenders. Artificial intelligence has an impact on every aspect, from a simple email writing to the development of more, I would say, more profound analysis, even on underwriting, because it's able to access a lot more information more quickly. And therefore, of course, AI doesn't take over human beings. It will never take over human beings, as far as I'm concerned. So we should not fear
Right.
it, but we should use it as a tool to make faster decisions ourselves. We can interrogate AI endlessly, and we can make something that's a good document into a perfect document in a very short time frame, looking at aspects that maybe we hadn't thought about ourselves. It's like having 100 employees available in real time, helping you to develop a concept, a product, a service, a report. So AI will continue to have a major impact. Of course, once again, we have to be sure that AI doesn't take over what we're doing.
Yeah.
We have to control it, we have to monitor it. And so, probably, I think there will be AI to control AI in the end, is the way I see it.
Yeah, it's kind of a new revolution here that's
Yeah,
happened.
yeah.
Yeah. And for listeners who want to learn more or potentially work with Lender, what's the best way to get in touch?
Best way to get in touch is to go onto our website or to write to me, lenderwise.com, or to simply go to our website, which is, by the way, lenderwise with a Z, as in Zorro. We give the ability to onboard directly or to request questions or to see our FAQs. And the best way is to simply reach out to us online or through you.
Yeah. Thank you for sharing those insights about you, about your
Okay,
company, and about the whole story that you said. And thank you
great.
for this amazing podcast session.
Excellent. Thank you very much to you also.
Thank you and see you on the next episode.
Excellent. Best regards to all. Thank you so much.
Bye.
Bye.